My name is Maриам Вехбе, and we have the company called the Gavel for tax consultancy in UAE for over 5 years now. We are specialized in tax consultancy in everything that is related to tax that is in the UAE, whether it is VAT, excise tax, ESR, economic substance regulation, and custom consultancy as well, and the upcoming corporate tax. And as Maxime had just mentioned correctly, we are waiting for the corporate tax to come so soon. What we have heard so far is that we were expecting the law to come as a first stage before the Christmas. However, if it doesn't come in the beginning before the Christmas, then it will be postponed to the beginning of the year. And then after this, we are expecting for a couple of months for the executive regulation of the corporate tax to come. However, this session that we are going to have it today will be only focused on VAT here in UAE, and I hope that we will cover almost all your questions that you may have on the tax environment in UAE. Please make it as much as you can as interactive. Do not spare any question that you may have for the tax environment in the UAE. We try to cover as much as we can on the types of business that maybe you may be interested in having here in UAE in this session. However, if you have anything that we did not cover it, we will be also happy to answer your questions. And please let me know if there's something that is probably in English that you some help in understanding or translating it to Russian, then please stop me so as Maxime probably or Katrina can help in this. And let me start. I'll just share my screen. So as we mentioned, we are the Golden Gavel for tax consultancy, and this session is going to be about value-added tax in the UAE. We are approved tax agent and tax agency in the UAE from the Federal Tax Authorities, which is FTA in UAE, and we can help in anything that is related to tax and tax environment in the UAE. So let us start here. What is VAT? VAT, it's actually an indirect tax that is based on a consumption, and it is imposed on import and on supply of goods and services over the full stage of any production or distribution or the business chain. And it can also be applicable on deemed supply. So when we say that it is on a supply, how can we define the supply? Supply can be either supply of goods or supplies of services. When it comes, the law had defined supply of goods in specific and left it for anything that is not goods, then this would be a supply of services. Supply of good, actually, it speaks about when there is a transfer of ownership of any good or the right to use the good from one person to another person, entering into a contract between these two persons to transfer it on a later time subject to specific conditions. And for the supply of services, as I have mentioned, it means that it is every supply that is not considered a supply of goods. So it's any supply that is not supply of goods, then it will be a supply of services. How can we calculate how much I owe to the FTA, which is the Federal Tax Authority, or how much I have to pay based on during my business operation? So anything that we usually do it as sales, or when it was a sales of a supply of goods or a sale that is supply of services, then this is considered as an output VAT. So that will be considered as an output, means that I have to pay to the FTA on my supply. And that's what I will be charging this output supply to the customers, and then I would be keeping it until the end of the tax period where I have to pay it to the tax authorities. Now, on the other hand, during my business operation, there may be some expenses that I am incurring, whether to buy the goods or to anything that is related straight away and directly to the service or to the business, then and to the taxable business, because some businesses may have taxable and non-taxable business combined together. These types of expenses that I have incurred during my operating of my business, it's considered as an input tax, where I also have to have the right to recover it or claim it from the FTA. So at the end of every tax period, we will do the calculation to see how much was my sales and the VAT that I have collected as an output, which is the right to pay to the FTA, versus how much that was my expenses, which is supposed to be my input tax, and the net is what I pay to the FTA. This net, it can be sometimes on my behalf, means that it can be a refundable situation, or it can be an amount that I have to pay to the tax authorities. Now, here it's a very quick example on what we have been speaking about in the first slide. Let's assume that I am a company that is called ABC. In this company, I may have my supplier and I have my recipient, which is maybe the end user or another company as well. So what will happen is that during my operation, I have to incur some expenses. And let's assume for the sake of this example that the value of these expenses was 200. And then my input tax for this one was 10 dirham. So then the net that I have to pay to my supplier was 210. At the same time, I had some sales due for my supply, whether it's a supply of service or supply of goods, which was, I have charged my clients for 400 dirham. My output tax was 20 dirham, and the total of my invoice was 420. The net is what we are going to be paying to the FTA, where I will have to mention the output tax, which is this 20 dirham, less the input tax, which is this 10 dirham, and the net payable would be the 10 dirham that I have to pay to the tax authorities. Now we will start sharing some key concepts of what is types of supply that we may have here according to the law, the decree law that had come in the UAE. I also forgot, probably, I'm sorry to tell you that the law in the UAE for VAT had started from 2018, and there was some specific amendments, minor amendments that had come during November this year on the decree law and on the executive regulation, but they are not major, and they are already covered in our presentation today. So the types of our supply, it can be taxable at a standard rate of 5%. The VAT in the UAE percentage is 5%, which is different from other GCC countries. So for example, it may be in Saudi Arabia 13%, and it may be in Bahrain 10%. However, we in UAE are considered the less percentage of VAT, which is only 5%. So it can be taxable at a 5%, it can be taxable at 0%, it can be exempted, and it can be out of scope. These are what the law had come to us about it. I will take you now through each of these types of supply so soon in the coming slides. So when we say that we have our supply can be a taxable supply at a 5%, it would be then that I'm providing a supply of goods or services for a consideration, and which will be mostly for businesses who are operating in the UAE. So then that's what we call it in a simple terminology here, is that it is local to local, means that there is a company that is established doing another supply of whether services or goods to another company in the UAE. Both of them are considered local to local, so then they would be taxing each other at a 5%. There may be another type of supply which is at a 0%. This 0%, it means that you are still taxable, but it is 0%. So what does it mean? It means it covers specific types of businesses that the federal tax authorities have mentioned in the decree law, plus it also covers everything that is considered as an export of goods or export of services. Now, what will happen is that these two types of services or supplies, whether it is the taxable supply or the zero-rated supply, both of them we have to continue with all the obligation that is supposed to be for us, like means the registration and section of the return, and we have the right to recover input tax on them. Whereas if I'm doing a type of supply that is considered as an exempted supply, then this type of supply, it is basically, we cannot claim input tax on it, and we don't need to register if I'm doing this specific only supply and my business is only concentrated on this supply. There are other types of, the last supply, which is the out of scope supply. It is one, there is like, I'll just give you a very quick example. It is one, some types of services or good had happened between some place outside UAE to another place outside UAE. So that's what we say, from the rest of the world to another rest of the world, where UAE company may be established here, but they have done some business from one place to another place outside UAE. So this would be considered an out of scope supply. Let's go into details with every type of supply that we have just spoke about. So if we will start with the taxable supply, it is a supply that will be charged at a 5%, means that when I'm going to issue my invoice to my client, will include a 5% on the top of my supply of services or supply of goods, and the input tax will also be recoverable. And this supply will not include anything that is related to exempt supply. I have mentioned here a few examples of what would be the taxable supply. It may be like, for example, if we have trading companies, commercial properties, software supply, e-commerce supply, hotel and restaurants, anything like for example, shops that, for example, supermarkets, all these things that are that they provide the services for people who are inside UAE. The zero-rated supply, as I have mentioned earlier, it came specific for specific sectors, and these are the specific sectors that we have mentioned. Zero-rated supply, it means that you are taxable, and this is some big confusion that most of the people have it here also in UAE, is that they think that if they are zero-rated, then they are not a taxable person. However, it is a taxable person, but you are at 0% rate. So it means that when you are issuing an invoice or when you're doing any supply, you are doing the supply, but at a 0 rate, but you are still a taxable person. So what will be the businesses that will have are residential properties. Now here in residential property, you may notice that we will have it here and we will have also in the coming slide. So the law in specific speaks about residential properties as this. If it was a residential property that had been currently established now, then it will be considered as a zero-rated until one of both the conditions happen, either the first supply or the extension of 3 years after the accomplishment date had happened. So for example, let's say I have constructed or developed a building, and this building was a residential building where I need to start either selling it or renting it to other people. So when I finished it, there will be a certificate of accomplishment that will, for example, will put December 2022 is the accomplishment date. So the first supply, if I start, for example, renting houses inside it, the first supply of this renting will be at a 0 rate. The first sale, if I sell one of the units, will also be at 0 rate. But if I rented a house and then after 1 year, the tenant finished and then I want to rent it again, then it will be exempted. So it will not be anymore falling under the interval of 0 rated. Then the third condition is that if I maybe actually have developed a building, but through the first 3 years of the building, I did not do any sale or any renting, then when the third year finish, then it means at that time that any supply will happen after 3 years from the date of accomplishment will be considered as exempted going forward. What will matter in this scenario is that what is happening, what is going to happen for my input tax that I'm incurring into keeping the residential building on a good condition. So that's what will be the difference for you. So the residential building, again, it is basically considered as 0 rated, whether it was the first supply or the first 3 years after accomplishment. Now, the second type of business that will be eligible for the 0 rated supply is the basic healthcare, the export of goods or services, given that there will be some conditions on the proof of the export, which we can speak about it later on during the Q&A if you are interested. And of course, the international transportation and related means of international transportation. Now, what will be the exempted supply? It is basically the residential building, as we have spoken before, but after 3 years or after the second supply, anything that is related to financial services. But then again, when we speak about financial services, it's a very big market sector or line of business. So anything that, to make it very simple, anything that is implicitly in the service of the financial services. So any fees that is implicit in the financial services will be considered as exempted, but anything that is explicit, then it will be taxed at a 5%. So for example, let us speak about a bank who want to give a loan. If this bank, when the bank is giving a loan, there will be some types of course, there will be, first of all, the interest that they have to pay, plus there will be some other fees. So the fees that the bank will straight away or clearly mention it and publish it to the client who wants to come and take the loan will be considered taxed at a 5%. However, the interest rate that he has to pay and the interest income that the bank will collect on the loan will be considered as exempted. We will speak also about investments, what will be the treatment of the securities and equities and capital gain on it soon, after a couple of slides from now. But if we will now go back to the exempted supply, as we have mentioned, it is the residential building as the first one. The second one is the financial services, the sale of a bare land, and the local transportation that is in the UAE. Compliance. What would be waiting for me when I start doing my business here in the UAE? What will be my obligation to the FTA, and how do I actually have to maintain a proper compliance on it? So first of all, what we will need to think about is that when we are going to establish a company here in the UAE, and after the company start being operating, we will have to start thinking about obtaining a VAT registration number. Based on this VAT registration number, there will be the FTA will be sharing with us what would be our tax period, and when are we expected to do the filing of our VAT return. We are at the same time expected to issue correct tax invoice based on what would be the requirement as had stated in the decree law for the tax invoices. And we are also expected to maintain our records of all our sales and all our expenses and the import and export and the VAT returns and everything that can be supportive to this. If we are a service company that means that we provide services, then we are expected to maintain this record for 5 years, starting from the date that we established the company. And if we are a company that provides real estate or a registered company for real estate or goods, then we are supposed to maintain it for 10 or 15 years. However, FTA there had been some extension for the limitation of statute in the latest amendment that had happened, where the FTA had mentioned that if any taxable person had received a decision on assessment, then they have to keep their books ready for the coming 4 years from the date of assessment. So this would basically extend the maintenance of our record period from 5 to 9 years. Of course, we are expected to keep ourselves always ready for any audit or assessment that will come from the Federal Tax Authority, and we will always have to keep ourselves updated if there had been some changes in the law or what had been the changes on any other regulatory or compliance in the UAE. Okay, we have mentioned that in the first beginning that we were supposed to register as on when we start establishing the company. But we need to know when is the correct time for us to register and how do I need to register. So to answer this, what we have stated in the decree law again is that the FTA, they have basically defined 2 types of registration. It's either the mandatory registration or the voluntary registration. The voluntary registration, it speaks about, and we have here also focused only on the turnover, because we can register based on turnover, or we can register based on expenses for the coming 30 days. But to focus only on the registration side of it, on the income side of it, or the turnover side of it. So if the company had been already doing from the date of inception of the company till, for example, the end of the month, an amount of 187,000 dirham, 500, which is equivalent to $50,000, then we can apply for something called voluntary registration. However, if the company had already received an income, or had already made a turnover that is amounting for 375,000 dirham, which is almost $100,000, then over the last 12 months from the date of inception till now, then we will need to register before exceeding this 375 to avoid any penalty that may come from the FTA on late registration. So for example, let's say that I have opened my company in January 2022. Now I am in December 2022. I'm about to finish 12 months from now. I have already done so far, let's say 350,000 dirham. And I'm expecting for the coming, by the end of December, that I would receive 100,000 dirham more. Then I have to register on the spot, because if I wait until January, then I will already been exceeding the 375, and then there may be a potential of some penalty that the FTA will incur it on me. How do we actually calculate the turnover? What is the turnover? When I say 375, what is this 375 as a quantified in money? It is basically everything that is considered your local sale. So if you are, let's assume you are a service company who's providing services in the UAE for specific clients who are in the UAE, so then this will be considered as your local sale. Now, you may also be having other clients who are outside UAE, but you are providing for them services from here, from Dubai. So then what will happen is that we will be adding your total local sales that is in the UAE, plus your total export of sales that is outside in any place in the world, plus anything that you imported, whether you have imported goods or services. Let's assume, for example, that you are a manufacturer. You wanted to open a factory here in the UAE, and in this factory, established the company for the factory. You have done, you have taken, like, for example, let's say a warehouse or whatever. You have imported some machines that is coming from Russia, and this machines, let's say it was for $500,000 worth of. Then I will straight away register based on my importation, even that I haven't done any sales yet. Means that I haven't yet manufactured my good that I was going to do it, and I haven't even sold it in the UAE or for outside. Let's give another example. You are a service company here in the UAE. You may have clients here in the UAE that you are doing for them, let's say tax work. But I also may have some clients who are outside that I'm helping them on their tax work in their home country. Then this is an export of services that I am doing for them. So when I'm calculating whether I have reached to the mandatory threshold or no, I will add what is my total for my local sale plus what is my total for my export of services. Some question that keeps on coming for people who are in the UAE, or anyone who's interested to come and start working in the UAE, is that what is the difference between having a company in a free zone or in the mainland from a VAT perspective? So we thought of sharing this so as we can keep it a little bit simple for whoever wants to start his establishment here in the UAE. From a VAT perspective, it doesn't basically count much whether you are in free zone or you are in mainland, because the indicator in our case is how much was your threshold of your turnover. Have you arrived to the 375 or not? Now, what for services in particular, so companies who are providing services in particular, it may be not important because according to the law of VAT, services, whether you are basically supplying it from a mainland or from a free zone, it will always be 5%. Unless you are exporting your services to outside UAE, then it will be eligible for the 0%. So if you are a service company who you are established in mainland, or you are established in free zone, as long as you're doing services, then you are supposed to have it 5%. You're supposed to tax your clients for 5% in the UAE. And if you have clients outside UAE, then you will be charging them 0% in your invoice. So that's why it doesn't make a difference if you are in a free zone or no, and if you are a service company. Now, it may be a free zone may be exempted from VAT registration if they are only doing services for outside UAE. But how will we do it is that we will still apply for that person. So let's say I am a company that manufactures computer, and I have established my company in UAE. However, all my clients are outside UAE. So what we will do is that we will apply for the normal registration, and while we are doing the registration application, we will notify the FTA that all my clients are outside. I will give a proof of my invoices or my contract, for example, and I will ask for an exemption from VAT. And we will still share a declaration that as on when I will have a client who is in the UAE, then I will come to register straight away or immediately. If we are if there is any supply between a local, for example, between designated, there is some specific rules between the supply of goods between designated zone and other designated zone, where there may be no need to issue VAT, to put VAT in the invoice that we issue, but this will be subject to a specific regulation, and it is specified only between designated zone. One thing that I would like to mention also is that free zone was a concept that was a long time before, and before the introduction of VAT in the UAE. And designated zone by itself is different from free zone. So not all the free zones are designated zone. Designated zone are only 19 areas that had come by name in the law, the decree law, and only those designated zone are considered or qualified for this specific treatment in the VAT decree law. Now we will start with types of business and what will be the tax treatment for these types of business. And if you would like to have any question on for similar businesses that you are thinking of opening here in the UAE, I'll be happy to answer you. As I told you, we have put some types of businesses that had came to our mind. However, if you have any type of other business that you would like to ask about, we will also be happy to answer you. Let's start with the trading business, where the companies, they import and export in the UAE. When you are importing, it would be considered as taxable. If you are a registered person, it would be coming straight away in your tax return as an in and out, and you don't need to pay anything because it will not have any effect on your total tax obligation or tax liability to the FTA. When you are exporting your goods outside, it will be taxable at a 0%, as we have mentioned earlier in the slides related to taxable supply at 0 rate. If there are goods that are actually been sold from one place and outside UAE to another place outside UAE, then this will qualify to out of scope, and there is no need for us even to report it to the FTA or to tell them about it. However, we will need to maintain it always with us, because if the cash is getting paid in the UAE, usually, so let me make it a little bit simple. You may be a company here, whether you are a full established company, or whether you are a representative company, or whether you are a branch for a foreign company. the contract may be signed by the mother company or signed by you between, let's say, a client who is I don't know, let's say in Saudi Arabia, and the goods is going to move from Russia to Saudi Arabia. So the goods did not come to UAE, it was not imported to UAE, and it will not leave from UAE. However, what will happen is that the client, from Russia, it will be straight away delivered to Saudi Arabia, and Saudi Arabia will be paying the UAE entity the amount of these goods. Then in this case, what we usually do is that we will consider it in our tax return in the UAE as an out of scope, but we will need to maintain the document and the proof why it is an out of scope, because there will be sometimes, if FTA comes to audit us, they will be asking about the bank reconciliation statement, and they will see that there is some amount that we have received it here in the UAE. So we need to tell them that this was considered an out of scope transaction. Other type of the business is the gold business. So there may be some people who would like to trade in golds and diamond or jewelry. There may be some people who would like to open a company only for the trading of the gold, or probably open a manufacturing company for gold, or opening a shop to sell gold. So if I am a company who will be trading in pure gold, which is the 99% pure gold, then it will be straight away 0% on import and on export and on sale here in the UAE. If I am a company that will be basically having, let's say, a shop where I will be selling gold, then here we need to basically define our client. So if I am a company selling to another company gold, then this will be considered as a B2B, business to business, and this will be considered under RCM, where I do not need to include VAT in my invoice, but rather I will put it 0%, based on some specific conditions that is also come in the law, and some specific declaration that I will take it from my client. And finally, the last one would be that if I am a company who I'm selling gold or diamond to end user, anyone who passes by my shop, then it will be B2C, and in this case, straight away 5%, because it's a local sale. Capital investment. Capital investment, we try to capture here whatever had come to our mind and from our previous experience. However, if you have something different, you're always welcome to mention. In the capital, you may be actually receiving some income from your investment, whether it is in securities, in bonds, in options, or any other type of commodities. In this case, your income will be coming from one of the two, either from your capital gain or from your dividend. And according to the VAT law, this is considered as an out of scope. It means that you will not need to report or to declare this to the FTA on your income that is coming from this specific transaction, even if you were a taxable person. So let's assume that I am a company that works in general trading, and at the same time, from my returned earning, I have taken, say, like $1 million or so that I wanted to invest it in securities, whether it is local securities here or outside, or even I have invested it in another company by holding some shares in them. My capital gain that will come, or my dividend distribution that I would receive it from all the types that I had just mentioned, will not need to be reported in my tax return. Even that, let's say that I have taken this $1 million and I did not do anything, I just put it in term deposit here in the bank. Again, this income that I'm going to receive it is going to be exempted, and there will be no need for me to report it to the FTA. However, I just need to maintain those transactions in a reconciliation file. So as in case FTA reconciled my bank statement, I will be able to provide the proof. There may be another case, especially happens in people who works in softwares and in IT, where they usually charge something on royalty income. For example, there may be a company which is a software company here in the UAE, where they have developed some specific type of IT system or software. and then they have sold it to their sister company or to whoever was a foreign connected company in Russia, where they are receiving from them royalty income. This will be considered as a taxable amount, but because it is in Russia, then it is taxable at 0 rate. Now again, there may be, I'm charging this royalty income to a company, to another company that is in the UAE, then it will be straight away taxable at a 5%. And then if I am not registered, then I'm supposed to be registered based on my royalty income if I will exceed the threshold. There was one amendment that had come on director services. So you may be a person who is sitting as a director in multiple company boards. Before, this was supposed to be subject straight away to 5%. However, now we would need to see whether you will be qualifying for and qualify, then you as a director and as a natural person providing this director services will be subject to VAT, and then you would need to register based on this as an individual person. Again, the same thing that we have mentioned earlier, real estate can be basically coming from two main scenarios, either that I am buying commercial properties where it is either I will be buying either commercial properties or residential properties. For commercial properties or serviced apartments or short-term apartments, this will be straight away 5%. I may have, for example, a house that is in a building, and a residential building, but this house I'm always offering it for a 1 week, couple of days, 2 months, 3 months, whatever rent. Then this will make this, even that it is a residential, it will qualify this unit or this house to make it to be a short-term rent, and then I would have to issue 5% on my invoice to the tenant. Serviced apartment, it's like hotel apartment where they provide you cleaning services, internet, some room services as well, which is different from hotels. Plus, of course, hotels, they are all 5%. For the residential properties, as we have mentioned, residential property, which is the first supply or the first 3 years after accomplishment, it is 0 rated, and after the second supply or after the finishing of the 3 years, then it will become straight away as exempted. Selling of a commercial property, you may buy a commercial property and you want to sell it. When you want to sell this commercial property, it will trigger, of course, VAT in your invoice, and it has to be paid by the buyer. However, this will also come back to you. How would you agree between yourself and the buyer? Sometimes you will be willing to pay it, or sometimes and reduce it from the total amount of the transaction, or he may be willing to do it. In both the scenarios, we will have to know who has finally agreed, so as we can basically understand in which tax return it has to come. If you are a fresh new person who just arrived in the UAE and wanted to buy a commercial property and the amount of the commercial property exceeds the threshold, then we will straight away have to register you immediately because you have bought this commercial property. However, if you are a person who wanted only to buy a residential property, which is a second supply, and it is exempted on your individual capacity, then there is no need for you to register. Service companies are straightforward, 5% for their local supply and 0% for anything that is export of services. Now, we would like also to mention some other regulatory requirements, which is aside from tax, that is here in the UAE, and these are not the exhaustive regulatory requirement, but it is the thing that is maybe directly linked to tax, which is the audited financial statement. Currently in the UAE, any company that is established in free zones are supposed to provide, first of all, they are supposed to maintain their proper bookkeeping. Plus, they are supposed to notify the authority, the free zone authority, which they are under it, with the name of the nomination of their auditor who will be auditing their financial statement for the end of the year. And of course, they are supposed to be issuing their audited financial statement annually and uploading it in the portal of the specific authority where they are under it. And this is supposed to be certified and stamped by the auditor annually. Now, there will be some a bit differences between the deadlines. It goes to every company. ADGM in particular, I am only mentioning, it just came to my mind to mention ADGM because I was able to understand from Maxime's previous slides that he spoke about ADGM, and it is a little bit unique from other free zones. So ADGM, they basically tells you that it is not enough to issue your financial statement from an audited certified auditor in the UAE. There are some requirements that if you basically generate more than 13.5 million as a turnover annually and you have number of employees, a specific number of employees, then you can only issue your audited financial statement from the approved and the qualified auditors who works only with ADGM, where they can share with you the 40 list. So it is not any or every auditor can just give you if you exceed this 13.5 million. If you do not exceed the 13.5 million, and like let's say you do only $1 million during the turnover during the year, then you are actually not obliged to give the full slides of the financial statement, but rather assign the P&L and balance sheet shared with the authority before the deadline. That's why ADGM may be a bit different from other free zones here in the UAE. To go back to whatever we were saying, so usually free zones are people who are established in a free zone, they are supposed to provide and maintain their audited financial statement annually and provide it to their authority at the end of, based on different deadlines. In the mainland, currently, we do not have this requirement, and it is not obligatory on any company that is there by the economic department. However, if it is something that is a requirement between the investors or the shareholders, then this is something that goes to the company internal management decision, and it is not implemented by the authority itself. We are expecting, however, that if the corporate tax is enforced in the UAE, then each and every company, whether they are in the mainland or in the free zone, are supposed to provide their audited financial statement along with the filing of their corporate tax return annually, because there should be some, at least attestation to the federal tax authority that when the person is paying based on this net profit for him for this year, that yes, someone else had actually certified that this amount is correct. I had come to the end of whatever I have. If there is any question, I'll be happy to